Asian financial markets rebounded on Tuesday after easing geopolitical fears helped restore investor confidence, although uncertainty surrounding the Middle East conflict continued to keep markets volatile. Asian stocks surged after US President Donald Trump postponed a planned bombing of Iran's power grid, easing fears of a major energy shock. Markets had swung sharply earlier in the week after Trump extended by 5 days his ultimatum for Iran to reopen the Strait of Hormuz, citing what he described as productive talks, claims Tehran has denied. Analysts said the move appeared to be a negotiating strategy, noting Washington would also want to avoid a spike in oil prices. Investor sentiment improved quickly, pushing equities higher across the region. MSCI's Asia-Pacific Index outside Japan rose 1.3%, Australia's shares gained 0.7%, while Japan's Nikkei climbed more than 2%, recovering most of Monday's steep losses. US futures were largely steady after earlier gains on Wall Street. Oil prices edged higher after plunging nearly 10% in the previous session as traders reacted to reduced immediate conflict risks. Brent crude rose about 1% to just above $100 per barrel, while US crude gained nearly 2%. Despite the rebound, analysts warned markets remain highly sensitive to developments in the Middle East. Investors are closely watching whether the deadline extension signals genuine diplomatic progress or simply prolongs uncertainty, with price swings expected to continue in the coming days. Global bond markets steadied as investors reduced expectations of aggressive interest rate hikes by major central banks. US Treasury yields stabilized after sharp declines, with the 2-year yield holding near 3.85% and the benchmark 10-year yield around 4.34%. Markets now largely expect the US Federal Reserve to keep rates unchanged this year. Expectations for tightening by the Bank of England and the European Central Bank have also been scaled back, although analysts cautioned that prolonged disruption to energy supplies could still push inflation higher and increase borrowing costs. The US dollar remained under pressure as improved market sentiment reduced demand for safe haven assets. The euro strengthened to around $1.16, while the British pound held near a 2-week high. The dollar was little changed against the Japanese yen. Meanwhile, fresh data showed Japan's core consumer inflation slowed to 1.6% in February, falling below the Bank of Japan's 2% target for the first time in nearly 4 years, complicating the central bank's case for further rate increases. While markets welcomed the temporary easing of geopolitical tensions, investors remain cautious, with energy prices and diplomatic developments likely to dictate market direction in the days ahead.